Hi there, traders. This is Brad Goodwood with the weekly kickoff. All right, now just to start the week off, we do have the some Japanese officials there coming out with fresh warnings about yen drops. Okay, saying that they're ready to intervene. Now, I'll take that with a grain of salt. One of the key things that is a little bit more important is where did the dollar finish up last week, right? And it was down a bit. Now, I've had a few traders sort of asking me a few questions about this, and if you just look at the data, right, there's always devil in the detail. So and looking at the numbers here, the durable goods, which is a big number for the US dollar, 0.7. Now, the Reuters poll was for minus 0.8, with the range -5 to 2.6. So, you know what, it's a pretty big range, and it's not too far away from the mark when you think about it. But once again, the devil in the detail. The prior numbers were 2.6. Okay, now we're revised down to 0.8. So that's like a -2% straight up. So that's weakness, right? And that's also you just got to really factor that in. Sorry, I'm just looking at the retail sales figures there in Canada as well. So we've got a situation where we had dollar weakness Friday, and just before I go to the charts, I got to say, like, the UK numbers were terrible, right? And even the revisions were terrible, but the sterling hit a brick wall and did not go more than sort of 5 pips below where the market was at the time. And it was one of those lessons. We did a live trading session there, got short on the numbers, which I would do 100% of the time. If I saw those sort of numbers, I would always get short. But if the price action doesn't match up with what the data is, within a couple of minutes, you can work out that something is wrong here and something's out of play, and you just close the positions out. Saves a lot of tears, and that worked out to be absolutely spot on, right? So let's just have a look at the dollar. Dollar sort of just drifting down a touch on the hourly charts, right? But you know what? As I said, the market is so fickle at the moment, sort of banging away with one number and then the next. The sentiment is swinging very sort of quickly, the pendulum, right? And that's because there's so much weighing on the Fed to sort of get to that cutting stage. The numbers keep coming back strong. So there's this to and fro with the dollar, which makes trading the majors a little bit trickier, okay? Because you've got that uncertainty with the dollar. You know what? I've been sort of making inroads into profits with trading the crosses. Now, dollar Swiss, if you're just looking at dollar Swiss and dollar yen, right, you could almost start to plan on putting a few speculative stop losses below the cloud in dollar yen if the Japanese officials are, you know, going to be really doing something. But the safe havens, right, have been on the back foot. Swiss and the yen just sort of cruising along. You've got a little bit of a bounce here back in euro, as there was with sterling. Aussie and Kiwi did follow suit, but they had a bit of a deeper, a little bit deeper dip than their big brothers, right? Their big cousins, whatever you like to call them, euro and sterling. And the dollar, well, it did sort of shift back down. The Canadian retail sales figures weren't like amazing, right? They were weak numbers. And but you know what? The dollar sort of ruled out, and we did see a bit of a rally there in oil from, you know, almost a good $4, right? So that supports a stronger CAD there as well. And that's where we end up, right? You look at those charts there and you're like, yeah, right, okay, I get it. There's a little bit of dollar weakness in the market. But once again, if the devil's in the detail, you come over here to the daily charts, okay, and we do have some great levels sort of building up on a lot of the major currency pairs. So it would be good to see some consistency with the US numbers, would make trading this stuff a lot easier. Now, I've just got I had someone asking me about like whether on the daily charts, if an instrument is actually going up or down. Now, what I would be sort of saying, well, you can sort of see on the trend, right? It's going up. Like dollar Swiss is going up since, you know, the start of 2024. You can sort of see very clearly. But if you wanted me to put like some real analytics on there, I would say using a 200-day smooth moving average is something we've used in the past. And it's not like an entry point. I'd never use it as a get in or get out. But if someone said to me, well, what's the level here where an instrument is going up or down? I would use the 200-day smooth moving average. So if the instrument is above that, I'm saying, well, it's going up, right? And if it's below those numbers, or that line, it's going down, right? So once again, I just included this to sort of get a bit of extra explanation in there. But as I said, I'm not using these moving averages as a entry point. You could possibly use them as an exit, but the trend lines is where the action is. So don't get misled here. I just sort of put it on my daily charts just to sort of give you a bit of extra information. So I make it easy for you to think, well, okay, long term on the daily charts, because we are getting a bit of sideways activity. While sterling's above that line, I would say it's going up, right? And that this is as simple as it is. And when it's below that trend line, I'd say it's going down. But really, we know if it breaks these trend lines, that's where the trading opportunities are, right? Once again, just trying to explain that so you don't get all bent out of shape and start throwing moving averages all over the place. But it is an easy way for you to look at your daily charts and go, well, okay, that one's going up, that one's going down. And then you can sort of work in there where your entry and exit levels are. All right. So, but the key part here is if I have a look across, once I've drawn the trend lines, I'll just widen those out a bit so I can sort of get a bit more detail around where those trend lines are. Okay. Which is a bit easier to do with trading economics. Trading view charts. So just looking at this, right, we've got a nice, good daily trend lines here on the downside on the dollar index. So that matches up with the top side in euro. Dollar Swiss, it's sort of like coming to a focal point. And so sterling's got a nice juicy resistance level on the top side, as does the Aussie. And we've got basically support and resistance on most of these instruments, right? Which is going to give us, good entry levels or trading opportunities as we go forward. So to me, I look at the daily charts and I'm like, wow, we've got some stuff to work with here, a lot of stuff. You come back to the hourlies and then you sort of start to piece in, right, where could I actually get into these things with a low level of risk? If I just get that out right. That's what we're sort of really looking for, right? So Mondays, right, like I'm doing here, I've already sort of done a bit of stuff on my charts, but just get your charts tuned up, right? Just find out where these levels are, okay? And then really you can start to focus in on what potentially you need, right? And this is the way you should be thinking of it. What do I need here to get euro going up here? Because I've got a really nice trend line on the top side, and that would be really good. Funnily enough, that's where the calendar comes into play, right? So if I just bring over trading economics, just to give us a weekly overview, this week's got a really good shape to it. Okay, we've got the IFO business climate numbers. I'd also, as much as I was saying, take the Japanese with a grain of salt, what they're going to do. As I said, usually they want to catch the market off guard in illiquid conditions. Monday would definitely cover that, but nothing's happened just yet. But just be aware they may chime in. You come down through into Tuesday. What we've got is this week, we've got a lot of sort of tier 2 numbers that are sometimes referred to as high impacting, which gives us opportunities for them to impact the various instruments, overlay that with what the central banks are talking about, and you can get some nice moves, right? Without the knee-jerk reactions of violent numbers like the non-farm payrolls or even the inflation numbers for that matter, right? You come into Tuesday, Aussie retail sales, definitely worth a look. Wholesale prices in Germany, S&P Case-Shiller numbers out of the US, right? These are all like good numbers that can sort of add some spice to the overall markets. And don't forget those consumer confidence numbers out of the States. Wednesday, the monthly CPI indicator, right? The Aussie data, usually it's probably out of all the developed countries, their CPI number is quarterly, but now, over the last year, they have brought in a CPI indicator, right? And this is their CPI number now. So just keep an eye on that as we go forward. I will be covering a live session on that. And then you come into that European session on Wednesday. Once again, nice, funky numbers, GfK consumer confidence numbers, and also those German inflation numbers, right? The prelim numbers. So maybe give us a bit of insight into what's happening with inflation there. That leads straight into euro and the euro crosses. Okay. But, like going through Tuesday, Wednesday, it's like just nice, right? because we can come back to the screens. You don't have to get freaked out with all the volatility. We should just have some good things to sort of work with. Swiss GDP growth, like GDP is starting to come on the airwaves. Check out those Eurozone unemployment and economic sentiment numbers. And then really, to me, I'll be starting to have a closer look at the US GDP numbers. Now, we'll be covering a live session on the GDP numbers. This also coincides with the weekly jobless claims number. And, we've got some wholesale inventories, pending home sales there later on as well. So, Thursday, that's when the dollar's really going to start to, show its teeth a bit, right? Where we can actually get some traction. If you are looking at the majors or the equity indices, that's when, things should come online. Now, don't get overly excited. I mean, I don't expect a huge amount of the GDP, but there's always potential for it to happen. That's why I would be looking at it, right? Now, if I didn't think there was anything possible, I tell you what, I wouldn't be wasting my time. You come into Friday's trading. Okay, the Australasian session, we'll get those manufacturing numbers out of China, right? See what's going on under the hood there. We got in Europe, we got the German and Swiss retail sales figures. Good to see how, are people spending, right? Across the globe, the retail sales has been dropping dramatically, right? So we want to see if that trend continues. UK mortgage approvals, consumer credit, worth a look. Inflation numbers out of the Eurozone. And then you come down to the very last part. We got the Canadian GDP numbers, but at the same time, we do have the PCE Price Index. Now, this inflation number is something that the Fed refers to quite a lot. So it's definitely worth focusing in on the PCE Price Index. Even though we're running into Friday, it can be, don't forget, you're sort of trying to add cash to your account. So any opportunity where there's potential for good specific direction and momentum, as long as we've got good technical levels, it takes the risk out of it, and there's some cash on the table. So I see some potential cash earning opportunities there on Friday. Personal income, personal spending. Like, we've got a bunch of other numbers coming out at the same time, which can sort of corrupt things a bit, like add a bit of extra noise that we don't want. But that's, we're just going to sort of deal with that. Focus on the big numbers and go from there. So just looking at the live trading and coaching sessions, Tuesday, I'm just going to go through a bit of analyzing and trading the macro fundamentals for those traders who want to ask questions or get up the curve on just interpreting the numbers, okay, and then how to sort of execute those. Wednesday, the Aussie monthly indicator. Thursday, US GDP growth, right? Once again, there's sort of, we might see some action there. As I said, it's always good to look under the bonnet of the US economy and see how things are going. And then Friday, US core PCE price index numbers, right? Big inflation number. It's actually a shame that this PCE price index wasn't on Tuesday, because then we get this inflation picture and it allows us to trade the dollar, reasonably aggressively through the week. But you know what? Friday, we'll have, 6 or so hours, 8 hours before the market's shut. There might be a short-term trade there. And what I'm talking about is it could be, 10 minutes, could be 2 hours, 4 hours, 6 hours, or maybe nothing at all. Anyway, it's worth having a look if that's got some power to it. And that's pretty much where we are, guys. It's the week, as I said, to me, fundamentally, it's got good shape. If I just come over to the bigger calendar, we do have a bunch of good things coming up. Let me just refresh that calendar to get really focus in on the high impacting numbers. And the key to us connecting cash into our accounts is isolating the best technical setups with the best fundamental sort of directional drivers. And we've got a bunch of them this week, right? So I'll go into detail on those as I go through each trading day. All right, guys, that's it from me. And good luck with your trading this week. Manage your risk. Focus on the best technical setups. Apply the direction and momentum. And ka-ching, hopefully we'll make some money. All right, guys, have a good one. All the best. Cheerio.